A leveraged buyout is the acquisition of another company using a significant amount of borrowed money, bonds or loans, to meet the cost of acquisition. You can watch the video on the LBO overview and theory in another section. In this video, we will build an LBO model in Excel. So in our example, Colbert Kravis Roberts, an American global investment company that includes private equity management, acquires Dave & Buster's at a 25% premium to its current valuation. We will build a model in 3 steps. The first step will include LBO transaction summary and sources and uses of funds table. The sources and uses table is a summary of the amount of funding required to complete an LBO transaction. Then we would go into calculation of the capital structure, which refers to the specific mix of debt and equity used to finance an LBO transaction. And then, using the assumptions, we would create a model and calculate the net cash flow, which we will use to calculate internal rate of return, the metric that estimates the profitability of potential investments, and equity multiple, which is defined as the total cash distribution received from the investment divided by the total equity invested. So these 2 numbers will show us at the end of the day whether an LBO transaction makes sense or not for our example. So let's go ahead and start building our model in the next video.